Partners is an Arizona-based firm. We do have clients all over the United States. So I believe, Troy, we're in 30 states right now. So we do manage assets all over the United States, and we actually have a few international clients as well that are residing overseas right now. So we've been very blessed to be able to have a lot of conversations with our clients and with their with our advisors that we help manage money for, as well as their clients, to really gain an understanding of what truly is important to people when it comes to faith-based investing. All of us on the faith-based team are Christians by nature. And so this is really near and dear to our hearts as well. And so it's nice that we're able to pair our personal beliefs with our investments and our education to be able to provide the management of this ETF for our clients and for the marketplace as well. So Mike, if you wouldn't mind turning to, we can start straight on page 3 if you'd like. So Steve said it beautifully one day. Steve's our CEO, and he's actually on vacation, or else he would be here joining us today. But the firm was really built on the priority of protecting capital that's entrusted to us and being good stewards of our money and having stewardship when we choose and select our investments. And we also hold ourselves to very high standards. I think in the investment industry, you hear a lot of these words often: ethics, integrity, research excellence, collaboration, all of those pieces, but it really does run through our blood here. And so pairing that with our faith, we've built the portfolios that we have. Mike, if you wouldn't mind going to the next one. This is a summary of our investment team. So while Troy and I are representing ourselves today, we do have several people with a very wide variety of backgrounds making management decisions within our portfolios. And so some of us have managed assets overseas. Some of us have managed assets for very large organizations. Some of us have been on the private client side and more institutional side too. So between all of our different viewpoints, we bring a advantage of just having a lot of different experiences to help us make our investment decisions. So I know one of the things you talked about early on was just wanting to get to know a little bit more about our philosophy and our process. So I'm actually going to turn it over to Troy first to be able to talk through our investment philosophy and our process. And then I will take the lead back and go through a little bit more specifics about the funds and the screening. And we can talk through as deep as you want to get in the weeds of all the details of what it means to be a faith-based investment. So Troy.
Perfect. Thank you, Sarah. And looks like Michael's got the investment philosophy page on the screen right now. So yes, I will go over our investment philosophy and our process. And this page from a very high level highlights what we believe and why we believe it. So first off, 60% of all stocks underperform in a given year. So you start off with the odds tilted against you. And our philosophy and process is designed to tilt those odds back into our favor. And so first and foremost, we believe that the market rewards companies for their free cash generation rather than reported earnings. And studies have shown that when earnings and cash flows diverge, stock prices follow the cash flows. We also believe that investing in high quality companies with sustainable competitive advantages, with improving economics that are trading at attractive valuations, are the ones that deliver superior returns over time. And we also believe that investing in management teams that are doing right by all shareholders, those management teams create durable businesses, which also win over time. And maybe to step kind of back for a moment, what do I mean by management teams that are doing right by all shareholders? It's being prudent allocators of their capital. It's rewarding shareholders through their excess cash, whether that's through dividend payments, stock buybacks, paying down debt, all of those factors. And then also it means management teams are rewarding their shareholders by doing right by society, conducting their businesses through a faith-based lens, if you will. And so those are very important principles that we follow through our investment philosophy. And a lot of people think that that faith-based approach leads to inferior returns. I think you would definitely be one that would agree that you don't actually sacrifice returns. And Michael, if you could turn it to the next page, please. There we go. This is a study done by a Christian Investment Forum, and the study compared funds versus a blended benchmark. And you can see that the results conclude that their faith-based composite outperformed the benchmark by 80 basis points per annum over the 15-year study period. And importantly to note that it wasn't this performance, the superior performance wasn't driven by 1 or 2 years of drastic outperformance that carried the rest of the time period. They've actually consistently outperformed. You can see that at the bottom of the page where this the faith-based composite outperformed on a 1, 3, 5, 10, 15-year period. So very consistent outperformance. And it's also
can I ask one thing about this is all of the composite from the mutual fund, and when the mutual fund started the faith-based investing, I mean, in Korea there is nothing relevant like this. But in States, I believe, even Priest last time we had talked, he saw this kind of the investment advisory or product many long years ago. But somehow some companies, some people started this kind of faith-based investing long ago.
Yeah. I'd have to dig into the actual mutual funds that were used in this composite, but obviously, yes, they go back more than 15 years. So there have been managers investing in this with this approach for quite a while.
Mm-hmm. So it's quite traditional, the kind of the theme class. I mean that how can I say this is a theme, or is kind of the sector? No sector is kind of theme, right? It started as a mutual fund start. Yeah.
Yeah, faith-based is more of a thematic approach to investing. And so even many, many years ago when the mutual fund started investing in this way, there are several companies here in the United States who have a very long track record of investing in faith-based or biblically based portfolios. And this actually does fall under the umbrella of ESG investing in the States now.
Process is you more like a free cash flow rather than the earning expect.
Yeah, it's definitely free cash flow. Earnings you can manipulate very easily, and so that's why we want to focus on free cash. That's the value of any asset is the value of its discounted cash flows, and we strongly believe in that. And so we do have a proprietary discounted cash flow model that we use for our names. So yeah, it's definitely grounded in free cash flow.
So ethical filter means that the Christian value filter, mm-hmm. right?
Correct.
Yes, correct.
Can I ask one thing? It might be a very silly question, but there are Christian value fund and also there are Catholic value fund. So yes. Is there any difference between that filter?
There certainly is, yes. And I think that's actually the perfect segue into the next slide. Mm-hmm. So one of the main things, especially here in the States, that you'll see are two different camps of funds that people manage. They either are Catholic values funds or they're more Christian values funds, which is the side that ours leans towards. When you were visiting with the priest, you actually mentioned it, the USCCB guidelines. So within those guidelines, there's very specific things that are important. It's protecting human life. It's celebrating life. It's, making sure that we're embracing human rights and just being mindful of weapons of war and keeping peace. And so traditionally, when you look at Catholic-based values portfolios, they're only going to be screening portfolios for abortion, embryonic stem cells, human rights, and armaments. When you begin to add in the more Christian values, there's not set guidelines for that, as we found. And so a lot of it is really having discussions with people and just finding out what's really, really important. And So in addition to all of the things that the Catholic funds screen for, Christian values funds actually puts another additional layer of screening on the portfolios too. So that's why in ours, you'll see the entertainment. So the adult entertainment is going to be more the pornography, like entertainment channels and stuff, gambling, some of those addictive substances like the alcohol and tobacco. Those are going to be additional screens within our portfolio, more than what the Catholic values ones would have. So we do believe that the companies who provide a benefit to society and act as those responsible citizens are more likely to grow more sustainably over the long term. So here in the States, there's actually a couple of different screening companies that you can use to identify very quickly if a company is engaging in certain activities. And so we'll utilize those to help us on the front end, but we also know that those are not necessarily the entire picture. We use that as a starting point to then dive in and learn more about why a company is being screened for what they are, or getting flagged for what they are, if you would, to understand what is their business practice, how much revenue are they deriving from it, is this maybe something that they acquired through a merger and acquisition that might be coming up to be spun off, is it especially in abortion, when you get into philanthropy, how often is it, what type of organizations are they giving money to? In the States now, with the overturn of the Roe v. Wade, it's our companies sponsoring travel to get abortions. And so it's really engaging and trying to dive deep to understand what the screens are, and using that as a way for us to determine whether or not a name is worth putting into our fundamental analysis to see if it has earned a spot in our portfolio. I think one thing that's important to note is that just because a company gets in on the front end and we have it earn a place in the portfolio, it does not mean that it's always going to stay there. A great example of this recently is Apple. Apple did have a place in our portfolio, and with the new news that came out and some other pieces, we actually decided as a team to sell the position. So we don't own Apple anymore, but we are we're running our entire portfolio through our screening every single month, and we're keeping an eye on it to see if anything changes, if news changes, and because this is important to us. Our faith values are important, and we know that it is to our clients as well. And so we want to make sure that our portfolio is as pure as possible. Yeah. Does that help?
Yeah. So you monitoring that this ethical filter every month?
Yes, every month. So at the end of the month, we run our portfolio.
So you have to read many news from all of the company.
Fortunately, those services help do some of the legwork for us, because they have algorithms that try to comb through like news headlines and such, and filings to see if anything has changed in that sense. But it is a starting point. It's not the end all be all, which I think is an important thing to distinguish too.
So could you say again why the Apple dropped from portfolio?
Oh, sure. So Apple came out a couple of months ago and said that they were going to start paying for their employees to travel to a different state that would allow them to get abortions, essentially, if their state didn't allow it, because there was a leak out that the Supreme Court was going to overrule a ruling here in the United States that made that a legal right. And so when they came out and said that, we said, nope, that's something that goes against our values. And so we had a discussion as a team and decided that it no longer earned a place in our portfolio. So we sold it. And Apple's actually a name that we really like. We think it has a lot of upside potential. We think it's a great company to invest in, but it doesn't align with our values. And so we removed it. And I think too, oftentimes the management of ETFs, they'll only do rebalancing of names, either quarterly, semi-annual, or annual. That's not the case with us. As soon as we identify something and have a discussion about it, we'll take action. We don't have to necessarily wait for any point in time to do so.
So that is why this should be active ETF, not passive ETF.
Right? That's exactly right.
Yeah.